Good afternoon, everybody. Today is June 23rd, 2020. This is John Gerard at Optimum Financial. Wanted to give you an update. 2020 has been, let's just call it a special year so far. I wanted to start out by end. I want to start and end with just some brief thoughts. You know, our country is a very unique place. Every now and then we need to stop and remind ourselves of that. America always eventually addresses the problems that we have. Some of these are deep problems, but we do always address them. When we address our problems, it's messy, it takes time, it doesn't happen as fast as we think it should or could, and a lot of times it's painful when we go through the process of addressing these things. We are a very uniquely designed government. Our structure allows us to change and address our problems. Remember, the great majority of the American people are a good-hearted people. They're kind, they're generous. The majority of the American people reside somewhere in the middle of the political spectrum. On television, it seems like we see all the fringe elements all the time. But you have to remember that the great majority of American people reside in the middle of the political spectrum. And in the end, we're a very practical group of people. It doesn't seem like that sometimes, but we are, and we will address our problems. So let's get to the market. Now, a lot of you are familiar with this chart. This is the Dow Jones Industrial Average. I've shown in the past these two channels. You're very familiar with those. If you remember back on our other presentations, the market was in this channel until the election, 2016. Right after the election, the market started running. We have kind of sat down here, and obviously this is where the market has come down, February and March. Now, I put my notes up here so you can refer to them with me. In February and March, we had a 38% drop in the stock market, and it really wigged a lot of people out because of the speed at which it went down. And now we've had a hard bounce up. Now, this pattern of a steep drop, almost a 40% drop. In fact, it was 40% or over 40% in some indexes, but a very steep drop, a very hard bounce, very normal. Now, this bounce is different in that we've had the federal government has induced tremendous spending into this bounce. They have spent trillions of dollars. They have printed trillions of dollars. But I want you to know that this pattern of a hard bounce down, and if you remember, we've talked about this before in one of our prior videos. In fact, the video in March, we talked about, hey, look, very typical, hard down, bounce, and then a second leg. We talked about that very thing while this was going on. So down, bounce, 2001, same thing. 2008, same thing. In fact, 1929, same thing. From November of 1929 to March of 1930, the stock market had a rip-roaring 50% bounce. So don't think that this is something that we are not aware of. I want you to know that we are aware of these things. Large sell down, stops dropping, big bounce. Then we get a second leg down typically. And the second leg down is usually worse than the first leg. Now, these bounces can take several months. So, we've had people call up here and say, hey, John, are you watching the stock market? And I'm like, yes, I promise you, every day we watch the stock market. We watch, and not only do we watch the stock market, we are aware of sort of what's going on internally in the stock market. So we are very aware of it. We watch it every day. We see it bouncing, I promise you. And they want to know, hey, I still got a lot of cash. What are you doing? You're not watching. You're not paying attention. I promise you we are paying attention. But we do think, as we said earlier in the year, typical, hard drawdown, bounce, second leg down. We're waiting on this second leg down. Now, we don't know anything. We cannot tell the future, but it would be typical for this thing to draw back down. So that's what we're waiting for. When it draws back down, we're going to start averaging back in. We're going to start averaging back in. So just know that these bounces can take several months typically. We are now in a recession. Going back to my note, we are in a recession. Now, some people think it's going to be a deep and long recession. Earnings estimates for this year, well, they're terrible. The estimates are down 23%. This is by Yardeni. Some call for them being down more than 23%. We've had 40 million plus people make initial unemployment claims so far this year. We believe this downturn is going to take longer than what the market is looking at. I mean, we don't think this is. A lot of people are saying, "Hey, the recession is going to be the shortest recession ever." We do not believe that at all, by any stretch. One reason is vaccines for viruses like this can take a long time to develop. I mean, think back in time. These vaccines take a long. Now, I know a lot of people are throwing a lot of money at it, and they're working at it very hard. But effective vaccines can take a long time to develop. So the market is anticipating a vaccine here shortly. I'm just saying, we may not get one shortly. The biggest thing we've been concerned about since late 2019 was the deep levels of debt in corporate America. Corporate America, and we talked about this in the December of 2019 video, if you'll go back and look at that. Corporate debt is at levels historically that have preceded downturns in the market and the economy. So we were already there before this even started. We talked about this before this even started. We were very concerned about that. Now, the Fed's response and the Treasury's response is, hey, look, let's encourage it. We know that everybody's over leveraged. We know a lot of these companies have way too much debt, but let's encourage them to go take on more debt to get out of their debt problems. We don't like that. We think that may make things worse later on. They've also printed trillions of dollars, which we think may debase our currency. In fact, the dollar has been going down lately in value. So, there are plenty of reasons to be in protective mode right now. Plenty of reasons. And that's why we are in protective mode. If we get a second leg down, we will become buyers on the way down, and we will average this money back into a normal allocation of stocks. So that's what we're going to do. We think there are more defaults, corporate defaults on debt, more bankruptcies to come. You're starting to see some bankruptcies coming now, and you're starting to see more defaults on this debt just recently. So we think that's more to come. So 2020, let's review the 5 unsettling things that have happened. Number 1 is COVID. I don't have to say anything about that. Number 2, don't forget we had an oil price collapse in there. 3, the stock market went into free fall. 4, we are now in recession with lots of unemployment. Now we've had riots recently. So those are 5 big unsettling things. There's also the added craziness of it being a presidential election year, and the media can highlight disruption. Because it serves their interest. Every night it seems like if you cut on the news, there's somebody rioting somewhere. Well, that's, the media companies, they thrive on that kind of thing. It gets eyeballs to the TV screen. So, we have to take this, although it can seem overwhelming at times, we have to take it in as we should. Now, I want to end with what I started with. We are a unique place. America is a unique place. And just stop yourself every now and then when you get overwhelmed with this. We have faced very, very difficult things in our country in the past. More difficult than this, although this is difficult, even more difficult. The process of Americans fixing their problems and addressing their problems can be very messy, very unsettling, not look good on TV. But also remember when you're watching these unsettling things that the great, vast majority of Americans are good-hearted people, generous people, and mostly very practical people. We will fix these problems. It may take longer than what everybody thinks, but we will fix them. And we will come out stronger on the other side. It may take a bit longer than we want. That's okay. We'll come out stronger on the other side. We sure do thank you for being our clients. If you have any questions, please call us. Thanks so much.